Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, good morning, everybody. Welcome back to another live stream. Happy Wednesday to you, and hope everyone is doing well. We got markets on the run here today. Take a look at the NASDAQ, impressively back at the all-time high. And I feel like this is something, of a Christmas miracle in June, if you will. Because to have the stock market make this kind of move, right, to have this ginormous drop off just to turn around and rip back to the highs is incredibly impressive. And, this has been the theme for the last few years. Also, my pen is not working. So let me just do this really quick. I want to see if I can try and fix that. Sometimes this bug happens and it's just very annoying. Let me see if I can fix it. If I can't, I'm going to give it up in 1 second. Let me see. Let's see if this works. All right, we fixed it. Nice. So to have the stock market make a move like this, only to completely reverse course and move higher, is pretty incredible. We saw that, a couple times in, last year too, like in 2024, we saw this incredible ability for the stock market to plummet and then just rip higher. And I think the theme here, right? Why is the market so resilient? Well, let's think about what's under the hood here. We have some incredible companies in the United States that are just growing like crazy. The AI stuff is materializing for many companies, which is, to the excitement of investors, to the excitement of traders. People are buying these dips because companies like Microsoft and companies like Robinhood, the companies like Uber, companies like Coinbase, these stocks are just having massive jumps. These exciting stories are playing out in the AI theme. At the end of the day, if you want to know why the stock market goes up, usually it's off of the back of incredible innovation and growth in big players in the companies that fill these indices, right? So you have these giant list of stocks that are just killing it. Look at Carnival Cruise Line, up 7%. Coinbase is up giant recently, up another 5% in the pre-market here. Now, the reason I bring this up is because this is the sentiment right now of this market. This market went from being euphoric to absolutely panicked and doomsday bearish to now the market has come all the way back. And you might say, so everybody's euphoric again, right? Not really. Now, this is what's interesting, right? So you might say, okay, so stock market's back to the all-time highs. Everybody's getting it wrong. They're getting all excited again. Well, yes and no. If we actually take a look at some of our sentiment indicators, we can actually look at this stuff and say, how excited are the bulls out there? Is this an overly euphoric? Is this a Also, is my sound okay today? Let me check. Yes, should be on the right mic. You might say, okay, so this is a market that's got to be like super euphoric now, right? Well, look at the put to call ratio. When we look at the put to call ratio, we actually still see there's this huge demand for puts. People are still sort of negative on this market, even though you've had such a sharp and impressive bounce back in the stock market, despite all of the uncertainties around trade, uncertainties in the Middle East. The market has been able to resiliently find its way back to the all-time highs. Put demand is still very high. So there's still this resounding crowd sentiment that is sort of negative on this market. Now, we can add more to this conversation if we take a look at the AAII Investor Sentiment Survey, which is a weekly conducted survey that asks stock market participants specifically, do you think the stock market is bullish, or are you feeling bullish, neutral, or bearish about the stock market? And for months now, we have seen the persistence of the bearish theme, people negative about the stock market. Now, why is this? Well, one of the more obvious ones is that the president of the United States is a pretty polarizing figure. Some people like him, some people dislike him, but even some people who like him acknowledge he's a super volatile dude, and we don't know if he's going to, he might just be wild enough, willing to see the stock market go down. That's what people were saying when the market was tanking. People were like, oh, he doesn't even care about the stock market. And so here's the thing. The sentiment for bearishness out there is very, very high. There's also uncertainties about what's going on in the Middle East. There's uncertainties about going with Ukraine and Russia. There's all sorts of stuff. The tariff stuff, however, was the big fear factor this year, right? That was what caused the giant sell-off in the stock market in 2025. Now, is it to the credit of people who were able to kind of, despite whether they like or dislike the administration, put that to the side and buy the dip on great companies? Great companies don't care who the president is. At the end of the day, really great companies are going to shine through no matter what the political regime is. They're going to grow their business. They're going to innovate. They're going to push forward no matter what's in front of them. And so if you got blindsided by what's going on in Washington, and that prohibited you from capitalizing on some great discounts on companies, that's something to learn from. And I point this out because this happened under Biden big time. This happens pretty much every time, pretty much all the time. There's a group of people. I made this point once recently, but I'll say this again. And if this person is watching, I hope that you respectfully, I do hope that you learned a lesson out of this. There was somebody who, the entire time the market was dropping, they kept commenting on my videos. And I've said this a couple times, but it was a good experience for a lot of the people who know this story already. There was somebody who kept commenting that the stock market's not going to go back to the highs until 2028, right? And obviously, their message was in relation to, they don't like the president, so they don't think the market's going to go back up. And this is not a pro-Trump thing, because people said the exact same thing under Biden. It's really, really dumb. It's really dumb. And so these sorts of comments, oh, the market can't go back up until 2028, just because the person you don't like is in the White House, is a really dangerous bias that unfortunately many traders let into their trading. Investors, traders, people let this stuff really impact the way they think. They think the market can't possibly be going up under Biden. The market can't possibly be going up under Trump, right? And it's a really dangerous way of thinking. The market is not Trump or Biden's pet. At the end of the day, the market is a representation of great companies across America, or if you're looking at other countries, great companies across Europe, Germany, wherever you are, right? So leave that to the side and be really careful with that way of thinking. How did your DAX position go? I'm still in the DAX position. It's looking pretty decent. We're back to break even, but I'm just, at this point, I'm like, hey, you know what? If we're back to break even, that is better than where I was, which was looking like I was going to get stopped out on that trade. I did get stopped out on my oil longs, so that did not work out for me. I tried to get long around this area, stopped out on that one. Silver, I got stopped out on this one too. Russell is going quite well. And I just closed a profit on the New Zealand dollar versus the Japanese yen. I took profits here this morning on my trade, which was awesome. So I kind of closed that one out and am willing to potentially get back into this trade if we get either a pullback or a break and retest. Right? So something like this, both scenarios to me look like opportunities to trade it again. But I just took a profit on that. I've been sitting in it for a little while. It's been a very slow trade for me, and I just decided to close it and watch what happens next. And if I can get another trade in, then great. How's your euro pound dollar cost average trade? It's fine. It's still just doing its thing. I've got 2 entries here. If it does push higher, then I'm ready to build those positions bigger. Actually, would it's weird when you're doing dollar cost averaging. The weird thing is like you actually don't mind at all if the chart goes against you, because it gives you an opportunity to scale into the position that you wanted to get anyways. It's kind of like selling cash secured puts. You almost want the market to go against you if you want to get assigned on something. In this case, with dollar cost averaging on FX, I don't mind if the market moves against me, because then I can average my cost basis and increase my size at levels that I like more. So I'm watching euro pound, CAD Swiss, same scenario, right? So I'm looking, I might actually add a 3rd trade on my CAD Swiss positioning. So we'll see if we can get that trade going. Euro dollar is pushing higher here recently, back to those highs. Pound dollar, same thing. Dollar yen bouncing back here a little bit. The yen had some weakness this morning. I'm not actually sure what all that's about, but we did get some pretty sharp yen weakness this morning. Gold is down 0.25%. Silver's down 0.5%. Gold, I have not taken a trade on gold, but I am watching it. I may decide to take a new entry on this one, or a trade on this one. I haven't traded gold in a minute, but I might take a trade on gold if I can get that set up. In fact, let me just check top setups. I think gold is still a bullish rating, but this would be worth checking. Actually, no, it doesn't look like it. Where do we lose score on gold? Let me see. Retail positioning. Let me go look at this. What's happening with gold's put to call? Take a look at gold here. Gold has high call demand. Interesting. So a lot of call demand still on gold. Actually, this kind of marries up with the sentiment in regards to what we just got done discussing, the S&P 500, right? We just got done talking about with the S&P 500's put to call ratio. There's still a high demand for like put contracts. It's interesting to me to also see a high demand for call contracts on gold. What does that tell you? Let's do a little mini quiz for the audience really quick. Let me ask you guys this. Okay, so if you have a put to call ratio, this is a challenge to the audience. If you have the put to call ratio for S&P 500 high, meaning there's a huge demand for puts on the S&P 500, but then on gold, there's a big demand for calls. What does that tell you about the crowd sentiment based on the put to call ratios? I'm curious to see what people say about that. Thoughts on indices near all-time highs? I think they can keep going. They look great. I'm trailing stops on several things, and I have quite a few stock positions that I think have more room to run. The best time to make money is when Trump is in the office. Joey, I mean, I got to push back a little bit on that. I think it just doesn't matter who's in the office. At the end of the day, great companies are going to be great companies. Bad companies are going to be bad companies. Dictating whether or not the stock market goes up based on the president, I feel like is such a trap that so many traders make. It's just not as relevant as people think it is. It sounds good. Oh, president I like is in the office, you know, it's going to cause the market to go up. Or president I don't like is in the office, it's going to make the market go down. I just feel like that is a trap that is so dangerous. Glenn, yes, that is correct. We're using GLD. Risk off. Yeah, you got it, Glenn. You got it. That's correct. So the idea is when you have a low, so if we have, to the question I just posed to the audience, we have a high demand for calls on gold and a high demand for puts on the S&P 500, that definitely is more risk off. In fact, that's like geopolitically risk off. That would be my guess, right? It tells me that, okay, when we look at gold, people are buying calls. Why would people buy calls on gold? They buy calls on gold because they think obviously gold's going to go up. What would gold go up for? Well, if it was going to shoot higher, which is what you're trying to get when you buy a call, it's probably geopolitically related. So maybe there's some hedging, maybe there's some betting going on by the crowd sentiment here that gold's going to shoot through the highs. So I actually am going to be cautious on gold with the put to call ratio at these levels. So I'm going to let things play out. I'm going to see where things settle, because you could, crowd sentiment's really bullish on this. I'm going to pause on that. And if we move lower, then I'll feel really good about it. If we shoot higher, I'll be like, dang, I missed it, whatever. But yeah, I mean, fundamentally, like economic data wise, I do like gold to the long side. So I think we may have a little bit. Eddie in the chat says more room to the downside. Yeah, I think gold, personally, I think we may see possible move lower in gold in the short run. Now, I'm not betting on gold moving lower. I'm bullish on gold primarily, but I'd like to see that put to call ratio chill out a little bit. Everybody seems to be on the buying call side into this dip, which is a little bit concerning for me. So I'm gonna watch gold close. I'll if you're in the Discord room, I know this is a little bit of a quick plug, but if you're interested in getting access to the signals, they are currently 45% off for live stream viewers. If you'd like some information about getting signals when I take the trades, I just closed out a trade this morning on the Kiwi Yen for a profit of 106 pips. If you're interested in getting access to those signals when they come out, we'll drop a link here in the chat to where you can speak to our support team. If that's something that you're interested in, you can get access to every trade that I take inside of our VIP room. Like I said, I closed out like 106 pips on the Kiwi Yen this morning. I'm trading a whole bunch of stuff here recently. My commodity trades have not been so hot. I had a hedge position on oil longs. That got stopped out. Silver got stopped out. But then we've got several FX trades. The FX trades have been pretty decent recently. I've been closing out several winners on this one. I've also been killing it on the indices. So we've got some good index trades going, and then some not so great commodities trades going. But such is the game, right? You have winners and you have losers. All that matters in the end at trading is that you come out making more than you lose. That is all that matters. You're not going to win every trade. I'm definitely not right all the time. But when I'm right, I try and make it count. And when I'm wrong, I try and do damage control. That is truly what trading is all about. It's like I'm not going to get it right all the time. So I went long oil and looked pretty silly about an hour later. But it's kind of one of those things. If you truly are like confident in your trading, a stop loss should not scare you at all. Like a stop loss is just it's just business as usual. Like I would encourage people to think about stop losses the way a store thinks about paying for the inventory that's in it, right? So if you are running a store and you have to sell things to make money at that store, how do you sell things at a store? You have to buy things first. You have to pay for things first. You have to pay for cash registers and inventory, and you have to pay staff, and you have to spend all this money in order to hopefully make money in the end. That's pretty much how trading goes. It's very similar to that model where, okay, stop losses are going to happen. I'm going to go long oil and it's not going to work sometimes. And you can play the game all day long of being like, well, you should have done this and you should have put your stop loss here. And you can do that, or you can just say that one didn't work out, move on to the next one. And as long as your equity curve looks like this, who cares if you have losers in between? At the end of the day, if your portfolio is rising more than it's falling over the long term, that's all that matters in trading. Like what I always get in terms of like when I talk about a losing trade, for example, is it doesn't faze me anymore because I've done this for so long. Like losing trades just happen. Losing streaks still stink. Like I'm not going to act like they don't hurt. They definitely still do. But I'm not in a losing streak at all right now. But when I am just taking a trade and it doesn't work out, it's such a dangerous way of thinking. Unfortunately, it's natural to us as people. Like as human beings, we want to be like, okay, well, what was wrong there? Why did this trade not work? Maybe I should have moved the stop loss. Maybe I should have waited until I got the fake out. Like you can do that all day long if you want, but I'm telling you, that is a trap. Because what you should do instead, in my opinion, here's how I approach it. I test the stuff that I do and I say, okay, I'm going to have a percentage that just don't work out. And I don't need to overthink things, right? I don't need to be like, why did this trade not work out? Maybe next time I need to wait for confirmation. Maybe next time I need to wait for a tweet from Trump. Maybe I need, like, all that is silly. Just accept that a percentage of your trades are going to be losers and make your size small enough that that doesn't hurt you. That's just, as we see Jermaine in the chat saying, stop loss is just the cost of doing business. Whether there's a stop loss or losing trade or drawdown, it's part of the game, right? That's how you trade. The reason trading is so difficult is because it's a foreign concept to most people to spend money to make money. It's very much why trading is kind of like running your own personal business. It's very foreign to people who have never run a business or never been a part of it to have to spend money, to take money out of your wallet and throw it at something and hope something comes back. That's very foreign to a lot of people. And so, when it comes to trading, that's something you have to get used to. And it's very weird to take that risk. And that's why I think most people, trading is not like right for a lot of people, is because that is not always something people are comfortable doing. And that's okay. But like, that's the reality of trading, is it's a risk. It's a business. You have to take money out of your wallet and it may never come back. That's why trading is so hard. It's very unnatural for a lot of people. It's very unnatural to not know if, when you place a trade, if you're going to make money in the end or if you're going to lose money. And what's especially foreign is the concept of saying, I'm going to place a trade, and if I lose, that's what's going to happen sometimes. Like, that's a really weird concept to just be like, so for work today, I stepped up in the charts, I took a buy trade and I lost money, and that was my work today. That sounds insane to people, right? Because it kind of is, in terms of like just looking at that one day. But if you repeat something every single day, that's how it goes. Nick, do you think we hit 3,300 today? I imagine you're talking about gold. I wouldn't be surprised. I mean, gold seems to be kind of trending here on the downside. If we take a look at like the 30-minute chart, we had a big push lower, bounce back. Where's 3,300? 3,300's right here. Yeah, I would not be surprised. I wouldn't bet on it personally, but 3,300 could totally get hit if sellers seem to be in control in the lower time frames. Take a look at your hourly chart. This thing definitely seems more bearish than bullish, at least right now. Could be today, tomorrow, we maybe go back and test for 3,300. But yeah, I don't usually place like day trades like that. Although I have been taking some accidental day trades recently in FX. I had a euro dollar trade, and I say this very much like I wish I had more of these, but I bought euro dollar like right there, and it just went straight up, and I just closed a profit. And I was like, okay, so I just day traded, which I wish I had more trades that were like that easy, because most of my trades are not that easy. But when it happened, I was like, heck yes, I'm a day trader today. So, yeah, we'll see. Sorry, someone's calling me. I just have to let them know. I've got a live stream that I'm getting on, or not a live stream, a podcast that I'm getting on after this. So I will, let me just double check that we are good. James, on the producer side, I sent you a message this morning. Could you just check that on your Discord? just want to make sure that we do have, I see on our live stream schedule that we have Marco coming on at 9:45. I just want to make sure that that is locked in just in case, because I do think I have to leave at 9:45 to do this podcast. So I just want to make sure I don't want to abandon ship early like I did yesterday on accident. Do you have a podcast channel, Nick? Yeah, Glenn. So I'm a co-host on a podcast, and it's a heck of a lot of fun. I do twice a week a podcast session with a gentleman named Johnny Hart, and he has the coolest British accent that I've ever heard. And it honestly makes me wish that I was born British so I had that accent too. But then again, no offense to British people, but I don't love your food, so I don't think I could be British. Although I have heard that in this is kind of like, I don't know. If I went to the UK, I would love to try Indian food because apparently it's really good there, and I like Indian food. Can we get linked here, please? Glenn, yeah, so what you want to do is just go to your Spotify or to your Apple podcast, and it is the Market Insights podcast. Maybe Chandler James could find you a link and drop it for you. My guess is one of them is already doing that. Britain's favorite dish is curry. I have read that. I love Indian food, man. Oh, it's so good. Although, I gotta say, I probably have not. I've ventured into the stuff that is like true authentic Indian food, not like white people friendly Indian food, and it is like definitely beyond my spice threshold by far, like really far. But it's still good. So I'd like to like slowly try and have more stuff, but I really need to. I do have several Indian friends, so maybe I'll ask them again to go to like an authentic like restaurant and ask them to give me like the one step above like white people friendly Indian food. I want to try that. Let's see, how are things looking this morning? NASDAQ still up 0.4%. And we are trading, by the way, guys, that's an all-time high for the NASDAQ. We're sitting at all-time highs. Stock market's about to open up 0.2% up this morning for SPX. Russell's also looking good. So plan on the Russell, by the way, if you're in the VIP room, my plan on this Russell 2000 position is to see if we can get a strong break above this level here. Like if we close above this wick, then I'm going to look to take this stop loss that I've got here and move it further into profit. So this week I've had some winners and I've had some losers, but overall it's been a very good week because I have so many stocks that I bought in the recent months that have really done pretty well. In fact, what I could do here is I could show you. Let's go to our trade tracker. If you want to see the list of stocks that I'm in. By the way, this is available to members in our VIP group. So if I just go stocks, like this is the list of stocks that I ended up purchasing in the recent, oh my gosh, I did not realize this. We hit 100% gains on our Robinhood. I've never had a stock move up 100. Actually, I take that back. Tesla, I had in 2020, I bought Tesla and it doubled like really quick. So this is the second time this has ever happened to me in my trading career. I bought Robinhood stock. On my second channel, I talk about stocks. If you don't follow me on there, it's Trader Nick Stocks. Also, thank you very much to producers for dropping this link. If you want to check out our podcast, I'm a co-host on there. And if you want to hear the greatest British accent you've ever heard, that's the link. It's not my British accent. Trust me that. So anyways, with Robinhood, so I've been talking about like the stocks that I bought on my second channel, Trader Nick Stocks. It's just Trader Nick -stocks. If you're interested in stocks, look me up, Google me. You know what I mean? I'm just kidding. I have less than 1,000 subscribers on there, but yeah, check me out. I'd actually appreciate the support. But I when I have some extra time to film stock related videos, I've been doing that. And so like things like Robinhood, Meta, Home Depot, like some of these have not done remarkably well, like PayPal, Home Depot. Fortinet is trying. This is a cybersecurity name, which I think, geopolitical uncertainty actually kind of favors stocks like Fortinet, and Palo Alto and things like that. So I didn't get Palo Alto and CrowdStrike. I just got Fortinet. Airbnb also doing pretty well. Another one that has been surprisingly strong has been Delta Airlines, which bounced back huge recently. Obviously, there was like a bunch of tension around the trade dynamics and uncertainty around potential recession, all this stuff. So we'll see how things go. Here's my list of stocks. So Robinhood, absolutely skyrocketing here recently. Just such a beast. Like I said, I wish I had put my whole life savings into Robinhood. Obviously, don't ever do that because a stock can also go to zero. So, but it's been a really big hitter. Palantir is also just skyrocketing. I don't own that. I do own it in my super high risk personal private account, but not a lot of it. Nvidia, ripping higher here. And again, this is why, guys, I know we don't do a lot of stocks on this channel, but this is the underlying reason for why a lot of you guys trade NASDAQ. This is why NASDAQ's ripping, is because you have all these individual companies that are just, ripping through the highs. They're doing incredibly well. A lot of the AI story is playing out well for a lot of things. Nvidia being, of course, a big one that we've talked about as kind of a barometer here, is almost back to its all-time highs. So, I mean, stocks are on a just a bull train right now. And I do think that what can continue to boost indices higher is the fact that we still have a lot of sentiment that's cautious to bearish. If that side of the market capitulates, if you get people who are like throwing in the towel, and I think this is going to happen personally. This is a playbook strategy that is very, very common in the stock market, is when you get confident all-time highs. I'm not talking about like just when we get back to highs, but if you get this move, right? The normal people who are not chart junkies and obsessed with this stuff like we are, they say, oh, the stock market's hitting all-time high. I should probably get back in. That's the normal person, like not the insane trader investor person. The normal person says, hey, stocks are doing pretty good. I should probably get back in. And that you might say, oh, so that's when we should sell, right? No, in my opinion, no. When the normal crowd gets involved, stocks can keep going for quite some time. Now, when you get into NFT territory, which I think is pretty iconic for people who have traded and invested during this last few years, that's when you want to get careful. When you get into NFTs are the new thing, a random, Melania Trump coin, just when it's going up, 15% a day or something like that, that's where you're entering into euphoria. But right now, we have a put to call ratio that suggests people are still cautious. You have surveys that are showing people are still negative on the stock market. I don't think we're there. Like, I think we have room to keep ripping higher. We've come back all the way from that huge drop that we saw. The ominous, tariffs are going to ruin everything story has come back to, they're probably not going to be as bad as people thought. And so far, inflation doesn't seem to be getting, out of hand with it. Sure, things could change, but right now we're looking a heck of a lot better than we were on that ominous April 2nd day, where it looked like we were going to go into, an isolationist society. We've completely reversed from there. And people who dislike Trump will call that the taco, right? Trump always chickens out concept. And people who support him will say, hey, look, he's a businessman, right? Doesn't matter. The point is, we're not likely to get the end of days tariff situation. And now we're back to those all-time trading highs. And I think we can continue. We have rate cuts around the corner. In my view, I've talked about this a lot on the channel. I think rate cuts are likely coming. Inflation's cooling off. Company earnings look good. To me, I don't see a reason to get overly negative about stocks just because they're getting back to the highs. In fact, if you were watching the channel, we were buying stocks. I say we as in I was buying stocks. I guess me and my wife. My wife and I were buying stocks during this time because there were great companies that went on sale. And if you capitalized on that, amazing. If you didn't, I would say just take that as a learning lesson. There were a lot of people who were so negative. Actually, as a homework assignment, if you want to, you should go back to my videos during early April and March and just read the comment section. It's enlightening, truly. People, the way we say it is that the bears come out of the woods when the market starts selling off. And they get so loud right before the bottom. That's typically how that goes. I've seen it way too many times in my trading career. From the YouTube channel perspective, from the content creator perspective, people get really loud about the market's going to crash right at the bottom of the market. Aaron says the comment section is the contrarian signal. Probably one of the best that I know, because, you know, and I show you guys, it's not something I'm keeping to myself, right? You guys can read the comments too. You can see those comments rolling in. And so use it. If you see everyone saying, you know, and guys, the thing is, it works both ways. Before all this stuff happened, guess what people were doing over here? People were absolutely euphoric about how Trump was going to cut taxes and Bitcoin's going to go to 200,000, and we had euphoria. So it works both ways. Ignore the politics, ignore the headlines, and just look at sentiment. It's a really important indicator that we talk about so frequently. Why do you have a super high risk account? It's a like a high growth. I'm not like margined or anything. It's just full of stocks that are like very, very speculative stocks. So in my really high growth, I have stocks like Robinhood, Palantir, Nvidia. I think I have Salesforce in there. I have Uber in there. It's just a bunch of companies that are like very, very growth oriented. I shouldn't say it's like my high risk account. It's more of my growth portfolio. And so my quote unquote growth portfolio, maybe I'll show it to you guys. It's nothing fancy. It's a small account. Like it's a couple $1,000s, which I know is not a small amount of money, but in America, in terms of, you know, what a large trading account is versus what a small one, I'd say small is like under 10K. And, you know, in the US, that's not a huge portfolio to work up to. So it's a smaller account, couple $1,000s that I've set aside to just be my high growth portfolio. And in the high growth portfolio, it's not like margined. I'm not like buying calls out of the money or anything like that. I'm just buying stocks that I'm like, these things could shape the future, but they could also go to zero. I've got Tesla in there. I've got, you know, I'll show it to you guys at some point. I'll pull it up, but it's not, I made it sound like it's some sort of gambling account. It's not gambling. It's just growth works when it works. And when I say growth, what I'm talking about is I'm talking about like buying stocks that are like Palantir works until it doesn't. Okay. Let me just, I know this is not the stock channel, so I apologize, but Palantir works until it doesn't. Palantir is a game changer. It's an AI super beast company. But when I say it works until it doesn't, I'm not talking about the company. The company's awesome. The company's really cool. What they build is really cool. And I see a huge potential for the company in the future. What doesn't work about Palantir is it's a stock that is valued like it's going to take over the entire world in the next few days. That's how expensive Palantir is priced. Now, in stock market land, just for a quick second, there's a difference between saying the company, I like the company, and I like the stock. When you like the company, I like Palantir, who you know, Palantir's awesome. They do some really cool stuff. They build all sorts of different technologies in the AI hemisphere, right? Company's awesome. The stock is a different story, because you can say, I love the company, but the stock is overvalued as anything. And that would be my take on Palantir. So when I say Palantir works until it doesn't, this is a very popular retail stock. It works until it doesn't, because if the stock market enters into a down period or we enter into a recession, this company will destroy wealth like no other, in my opinion, right? Again, the company might do fine even during that period of time, but it's priced so extensively high, right? Stocks can plummet and the underlying company can still be fine. That's something that investors don't always recognize, is that you can have a company still doing okay and the stock price can come dramatically lower based on how people are feeling in the market, right? It's very sentiment driven. When people feel good about stocks, they'll price them very expensively. When people feel bad about stocks, they'll price them really inexpensively. And so if a stock goes from being expensive to cheap, that process is very painful for investors who bought it when it was expensive. I hope that makes sense. But yeah, I'm not trying to deep dive into stocks right now, but that's a sentiment thing is really important. But as we just got done discussing, when it comes to sentiment, I'm not overly negative, because the S&P 500, the crowd sentiment still seems to be a little bit more negative. We still have the crowd sentiment buying a lot of puts. We have people buying calls on gold heavily. We talked about that earlier in the stream. By the way, if you want to try out the EdgeFinder, this is a great chance to do so completely for free. The EdgeFinder is free to use this week. And if you have not signed up to access it for free, it is free to everyone who's watching the stream right now. Here's how you can get access to it. The free week is now live. So until Monday, EdgeFinder is public access. If you want to get your copy, it takes you like 1 minute. Just fill out that form that's on the screen right now by clicking it in the link in the chat. If you are watching this stream at a later point, you can just head over to a1trading.com and chat with us on there if you need that link. Or maybe we'll link it in the description. But it's all over the channel, all over the website. If you want to take advantage of the free week, do not miss it. That is your opportunity. It takes 2 seconds to fill out the form. If you haven't gotten access, you could be playing around with the EdgeFinder probably in 1 minute and 7 seconds. That's my guess. It would take you 1 minute and 7 seconds to fill out that form and then get the email sent to you with the access link. Where do we find info to use the EdgeFinder to scalp? David, I'm so glad that you asked that question, because I think it was James on our content team just edited a video for that very topic. James, would you mind grabbing that link? It's the how to use EdgeFinder to find setups video that we put out yesterday morning, I think. We did a video specifically outlining how traders who are trying out the EdgeFinder this week. In fact, if you have not seen this video and you are trying it out this week and you're giving it an honest, try, and you want to really understand how to use the EdgeFinder, James put together a really good video on this exact topic, like how to actually take what you're seeing within the EdgeFinder and start trading with it as an assistant. How can the EdgeFinder essentially help you in your trading, whether you're a scalper, a day trader, a swing trader, a position trader, or an investor? The EdgeFinder has a lot of features that might benefit you, but it's understandable that it might take a little bit of learning, a little bit of practice to get there. So we'll grab that link and drop it here in the chat. It's just that one from yesterday. Boom, there it is. Click this link if you would like to explore the EdgeFinder with me. I did like I said, a video just discussing how you can use the top setups page, what time frames the EdgeFinder is built for, how accurate the EdgeFinder is. People ask that question all the time. How useful is it? A lot of people are trying the EdgeFinder out this week. I really highly recommend you watch this video, because those are some of the most common questions that people have for us. And I imagine you have them too. Guys, up next, we've got Marco's Trading Journey taking over the stream for his own session. He's a user of the EdgeFinder, a fundamentalist and technical trader, and sharing his insights on both what's happening on the markets and the charts and what's happening on the fundamental side. We'll have him joining the show here in just a second. We're going to play a quick break, transition, and set that up. And then Marco's Trading Journey is taking over. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, extra clips and bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello everyone, welcome to another live stream. So I hope everyone is doing well, and the plan for today is I'm gonna cover what I personally have on the watch list, so right here. And if you guys have any chart requests, anything special you want to see, I have my chat open on the side, and yeah, I'm gonna follow it. So let's get into the markets. What has been happening? Well, in terms of the two gauges for the market, let's first take a look at the S&P and let's take a look at the DXY. So what is the US stock market doing and what is the dollar doing? Well, the S&P 500 is going up almost at the all-time highs, very close. Could we reach all-time highs this week? Well, we could. I mean, it's only 0.65%. I think this week or next week, we're going to break into the all-time highs. So this is looking pretty healthy. It's looking very bullish. What I expect a straight breakthrough out of these levels? Well, I don't think so. I think we're going to pause a little bit, get a little bit of a correction. So this area will for sure have some sort of a reaction, and we could see a breakout and then a bit of a retrace and then a bit of a descending channel or maybe a pullback, and then the markets continue. So that's kind of what I'm looking at for the S&P 500. Now, some trade ideas, I do have them for the NASDAQ. For the S&P 500, not so much. We'll go through the NASDAQ in a minute. Second one is the DXY. So what is the dollar index doing? Well, it's currently sitting at this support. We had a bit of a bounce, so we went into the support, retraced. Now we're back at the support level. And I would say this is a pretty crucial level for the dollar. I did try to take some dollar long trades. I took a pound dollar trade. Somewhere here, I went long, I believe. No, sorry, somewhere here, and I got taken out for a loss just before the markets rebounded higher, but that's okay. It's part of the game. So I'm being a bit patient. I'm being a bit careful. You know, this is a pretty significant level. Although I'm overall bearish on the dollar, because you can see the dollar is just crashing lower, trending lower with a lot of force. I am bearish, but we could get a bit of a bounce. We could get a bit of a bounce. Something that we saw right there. If we do break through lower and commit, let's say we get 2 red candles on the daily chart, then that's a definite confirmation, in my personal opinion, that we're going to go lower. And we could go lower all the way to, let's say, this level. I mean, this is a major level of support on the daily chart. And we could go all the way to there. So some, let's say, dollar shorts, such as going along on the euro dollar longs, pound dollar longs, Aussie dollar longs could be very, very high probability plays. I just need to see, what happens at this level. Okay, very, very crucial level, very important. And I want to see it break lower or reject. In that case, I'm going to pause. I'm going to pause looking at the dollar pairs if it does kind of pull back more to the upside. You also have a trend line, if I'm not mistaken, right there, acting as some dynamic, let's say, resistance. Okay, dynamic resistance for the price to break higher. So interesting stuff. Fundamentally, I think the dollar is kind of weak. Let me open up the EdgeFinder. So I do believe that the dollar is a little bit weaker. If I go to economic heat maps, US, yeah, kind of 36% of the data is coming out bullish. Okay, 36%, that's kind of bearish. And that's the game plan. In terms of what I have on the watch list for the fundamental strategy that I trade, that's the strategy where I mix technical analysis, 1 hour chart, 4 hour chart, daily chart with fundamental analysis from the EdgeFinder with some macro stuff as well. So I do have a trade running on the New Zealand yen. This one has been running all the way from the 22nd of May, and it's been a pretty good one. I've been passively collecting swaps on this trade, not much, just a little amount, but it's still good to not have to pay to be in a trade, but actually receive income, you could say, for holding a trade. So I don't mind holding this for weeks or months. I would hold it for months if it does, if it just wants to range around in this level. Currently, I have a trailing stop loss on the daily chart at around this level, and I'm planning to possibly take the position off, so close the position when we reach this level of resistance. Okay, so this is kind of the resistance level that I'm looking at. Am I looking to add into more longs? No, not really. I'm possibly looking at the CAD yen. At the CAD yen to get in on some buy setups. Okay. So the next one that I'm closely watching is the NASDAQ. This one has been really tough. This one has been a bit problematic for me to catch. I know I was looking at this level of support, then price went higher. Then I was looking at this one, we went higher. And now I have a new level, which is around here. And if we do pull back, I will take an initial buy position. So the NASDAQ has been a pretty bullish ride to the upside, or pretty strong ride to the upside, with very minimal pullbacks, not really respecting the support levels. I thought we're going to get a bigger pullback when we got this bit of a slowdown, this bit of a correction. Hey, Roll Trades, what's up? Yeah, it's pretty hot in Croatia. So ascending structure here. So I thought we were going to get a bit more of a correction like this, but we didn't get that. Instead, we continued up. And I mean, these two daily candles right here are looking very healthy daily candles, very bullish daily candles. I like that. I think that's good. I do have some long-term holds on the S&P 500. So of course, NASDAQ and the S&P are correlated. So my investment portfolio is doing well. As far as trading goes, first looking for a bit of a pullback. Are we at the all-time high? I think we just broke out of that. I think we just broke out of this level. Yeah, so the NASDAQ, we're actually at all-time highs right now. Same thing as the S&P 500. I'm expecting some sort of a reaction to happen. I think this is a significant area of resistance. Okay, so significant area of resistance. And I would expect for some sort of a pullback, some sort of a retrace. Hopefully we do get one. Hopefully we do retrace to this level, get a little bit of a correction, and then I can get in on a trade. I would probably try to price it out with a stop loss just below, let's say, this level, aiming with a trailing stop loss. So not really having a profit target, but just using a trailing stop loss if the price does decide to go in my direction. So following it. Also, fundamentals on the EdgeFinder are pretty bullish on the NASDAQ. Thank you, Royal Trades, for the feedback. So that's for the US stock market. The thing I like the most is silver. Silver looks great. I've been closely watching silver. I had an alert above these highs on the daily chart. And then we did finally break out with some force, with some very nice, very clean momentum right there. And I did get a buy setup yesterday, which I missed, unfortunately. I take my entries on the 1 hour chart. It was a pretty simple, let's say, liquidity sweep right here. So a liquidity sweep is a flat range, and then you establish sort of areas of support and resistance above and below the range. And what price likes to do is it likes to go into these areas and heavily retrace. So Yesterday at 4 p.m. my time was a great entry. I missed it. So I do have a pending order set to get into silver. Fundamentals on the EdgeFinder have been bullish. So fundamentals on the silver have been bullish. Now, today, they're a bit neutral. I don't care personally. Gold is still bullish. Gold is still getting a fundamentally bullish reading. Silver is a bit neutral. For me, why I like silver so much is I think if you compare them, if you compare USD slash XAG USD, if you compare the gold to silver ratio, you can see that gold has been just shooting to the upside. Silver has a lot of room to catch up. So I think we can move back to this, you could say, equilibrium right there, which means silver should appreciate against gold. So if you just look at the charts, the daily charts, gold had a massive move to the upside. Silver, yeah, had the up move, but again, not so big. Also, what I like is if you go to the weekly chart or even the monthly chart, we are not yet at the all-time highs. Gold, we're at all-time highs. Silver, we're not. So we still have quite a lot of room to go up. In terms of percentage, you could say 37%, something like that, 36, 37%. I think this is a great play. Again, technical analysis, we had a breakout out of this range. We got some nice bullish momentum. We touched the 20 MA, which is something I look at as well. So the 20 MA is a nice indicator of when the price is overextended. So I don't really want to buy straight on the top, straight on the highs right there. I would much rather wait for a bit of a pullback for us to touch the 20 MA, and then I would look for an entry. So actively looking for buy setups. If price does decide to go up without me, if my level does not get tagged, I will look for a different entry. So I'll remove my pending buy limit, and I will try to get in on another technical setup on the 1 hour chart. So I can see we have some comments. And NBF says true. Rohit says, can you teach me one-on-one? I'm from Australia. I will pay you how much you want. I'm struggling now, but I will pay you to learn. So I don't do one-on-ones, unfortunately. But if you do want to learn how to trade, I do have a community where you can learn. It's called Zentum Trading. Okay, so if you go to my YouTube channel, which is Marcos Trading Journey, you have the link there to Zentum Trading. So it's ZENTUM Trading, and we have a complete course that teaches you how to go from zero to consistently profitable. So check that out. Eddie says, you have been doing a great job, Mark. Thank you for the consistency. No worries. Thank you for the feedback. Okay. What do you think of gold? So gold, gold is bullish in terms of fundamentals. Let me quickly check. I checked it this morning on the EdgeFinder. I'll check it again. So if we go to gold, okay, neutral. Currently a neutral reading. That's okay. For me personally, I have a game plan where I want to see a breakout of this range. We're looking pretty flat. We're looking pretty range bound here. So I would first wait for a bit of a breakout to be interested in some buy setups like this. I'm waiting for us to break the high. You can see where I have my alert set. So will it go up from here? My bias is bullish. Okay, my bias is bullish. But I would first need to get a confirmation. First, a breakout of these levels. Why am I bullish? Well, because the overall uptrend is very healthy, very strong on the daily chart. Also, the dollar is weak. I do have a bearish bias on the dollar. If dollar goes down, gold should technically appreciate in value. Okay, so gold should go up. Currently, we are in a risk-on environment. Stocks are at all-time highs, especially the NASDAQ. So that's not the greatest thing for gold. Gold prefers a risk off environment. But if we do get some more tensions in the Middle East, if we do get some more tariff trouble, don't forget there was a 90-day pause, 90-day tariff pause, I believe in April, when Trump announced a 90-day pause on tariffs for all countries. That's going to expire soon. I think in July we have the due date for the tariffs. Now, if the tariff news comes out very bearish for the stock market, if there is going to be high tariffs, then gold could catch a bid. Okay, gold could definitely catch a bid to the upside, and we could see more bullish momentum. I don't see this train stopping yet. I think we're just pulling back. I think we are accumulating a bit. For me to become a bear, I wouldn't really look to sell gold, but for me to become a bear, we would need to break some key levels like this one with a lot of force. We would need to see some clear technical failure, and you have this trend line you could paint as well, which is being respected nicely. Okay, so until that happens, until I see on the technical chart that the gold is going to the dumpster, I'm gonna be bullish. So pausing a little bit, but waiting for a breakout. Silver is better. Silver already had the breakout out of this range. Silver is now sort of retesting this support level. It's doing a break and retest formation. So we break the high, retest, break and retest formation, and that is pretty good. So silver, I like a lot. And I'm going to mention it again. Gold had the move. Gold already had an explosive move to the upside. Silver is lagging behind a little bit. Silver, I believe, has a lot of potential to go up. Okay. Rohit says, I don't know anything like how to make an account, which account. I have zero knowledge. Yeah, look, join our free Discord. Send me a message on there, and I will try to help you. So go to Zentum Trading, join our free Discord, send me a message, and we will go from there. CHF JPY. Sure, CAD yen, okay. High losses in sports trading. I currently do sports trading. I mean, trading is very similar to sports trading. It's all about probabilities, but the learning curve is pretty large. It takes a few years to learn how to be a trader. It's pretty similar to getting a college degree. So you wouldn't expect to become an engineer in a couple of months. It takes 5 years to get an engineering degree, at least here in Croatia. It's kind of similar to trading. It takes a few years to get used to the markets, to build your edge, to go through the ups, to go through the downs. So trading is, as I say, a high-end competition. Okay, but if you love it, if you think you have what it takes, you can be pretty successful. But yeah, trading is definitely a high-end competition and not a way for everyone to make money. Only the top few percent make money in trading. So you must love trading. Okay, Sakura says, when is the tariffs active again? I don't know when the 90-day pause expires. I think it's on the 11th of July. Let me see. When do the 90-day pause on tariffs expire? Let's see. July 9th. Okay. So July 9th is the due date when the 90-day pause will expire. And you could get some movement. S&P, you could get some movement. DXY, you could get some movement. Gold, definitely. If you get some troubles with tariffs, if you get some high tariffs, gold could catch a bid. Okay. August 11th, no, it's July. So it's July 9th. Okay, CHF JPY. CHF JPY. Now, CHF, the Swiss had an central bank event on the 19th of June. I'm not sure why it's not painted here in TradingView, but basically they cut the interest rates. Okay, they cut the interest rates to 0. That should be dovish for the Swiss. That should be bearish for the Swiss. Okay, it's a dovish move, bearish for the Swiss. Let's see what the EdgeFinder is saying. If we go to top setups, CHF JPY. Bullish. Okay, it's a bullish reading on the EdgeFinder. To be honest, I like the price action on the daily chart. On the yen, I'm kind of bearish as well. I don't think this is my favorite pair, to be honest, fundamentally. I think, in my opinion, there are some better pairs. NJ, New Zealand dollar, is very bullish in terms of fundamental data. CAD yen, Canadian dollar, is doing pretty well in terms of fundamental data if you look at it on the EdgeFinder. Swiss JPY, fundamentally, I don't like it. Technicals are looking pretty healthy. I like the uptrend. I think it's a pretty strong uptrend. We have just reached this sort of upper resistance area on the daily chart. Check out the monthly. Okay. We have just reached that, so we could see a bit of a retrace. That's kind of something. So I'm bullish, okay, because the EdgeFinder is bullish, technical analysis is bullish, I'm bullish, but I do think there are some better opportunities in the markets, in my personal opinion. I like some pairs a little bit more. I want to devote my capital to some other things. But if I had to give you a reading, it would be that we're going to continue going up, although we're probably going to pull back a little bit. There's probably going to be some sort of a reaction because we just broke out of this very significant high on the daily chart. Okay. CAD yen. Yeah, I have it on the watch list actually. CAD yen is doing great. I think CAD yen is a good play. If you go to the EdgeFinder and you search up CAD yen, it's going to give a nice reading. So Canadian dollar is getting good fundamental data. It's beating expectations. The yen, I'm bearish on, a little bit bearish on the yen. Okay. So I think CAD yen could go up. Also, the daily chart, if you take a look, we are in an uptrend. It's not the best uptrend, it's not like gold with massive swings up and minimal pullbacks, but still higher lows, higher highs. That defines an uptrend usually, or it should define an uptrend. We have pulled back to the 20 EMA. I'm actually considering some buy setups here. Okay, considering some buy setups. So when I look for an entry setup, I drop it down to the 1 hour chart, and then I look for flags. I look for a break and retest. I could look for even a liquidity sweep, so like a range, and then for the price to sweep the support, any sort of an entry. The entry is not important. What is the most important is fundamentals, macro, and technicals on the daily chart. So right here, I think CAD yen could be a buy. We are kind of hitting this resistance area. So yeah, I like NJ more. That's why I have a long setup there. I like silver much more. I like NASDAQ more, but I'm looking for entries. I'm looking for buy entries on the CAD yen. Still waiting a little bit. Also CAD recently, yes, overall data is bullish, but we have been getting some new data, which is turning out either neutral or bearish. So like a week ago, I think the CAD had like 85% of the data coming out bullish. This week, it's down to 70 or 75. So the fundamental bullish bias is dropping a little bit. Okay. Just sell gold. I wouldn't sell gold. I think you shouldn't be looking to sell gold, at least on the hard time frames. I mean, do you really want to sell into this? That's where most retail people, traders, go wrong, because they want to be contrarian. They want to call tops, they want to call bottoms, and then they lose money because they see a high risk to reward opportunity by going short. And that is what gets them in a lot of trouble. So if you're a new trader, if you're looking at the daily chart or the 1 hour or the 4 hour, I would be long on gold. DAX. Okay, so AJ is long gold. Navzar says, what do you think about the DAX? So I had a buy setup on the DAX. I had a buy entry, got taken out, unfortunately. Okay, I thought it was pretty nice. I thought it was pretty healthy. Look, the first thing I saw was on the EdgeFinder, we were very bullish for the DAX, so we were looking pretty healthy to go up. Also, we were at the all-time highs compared to the Nasdaq and the S&P. We had very nice bullish price action. This was a move from the bottom of 29%. It's great. We pulled back to this level of support. Boom, right there. I thought it was a nice opportunity to go long. Unfortunately, got taken out, possibly prematurely. You know, if this thing starts flying, I'll be feeling pretty bad, but it's just part of the game. It's part of probabilities. So got taken out just by a little bit, and then price did decide to go up. It doesn't mean we could not go down, but my personal bias is still a bullish one. If we do go up, I'll look to take on another position, take another stab, take another buy setup, and go with the flow. Okay, if the fundamentals continue to be bullish, price action continues to be bullish on the daily, I will look for another buy setup. Okay, EuroCAD. Let's see EuroCAD. The daily, let me check the fundamentals as well. EuroCAD. Neutral. Fundamentals are neutral, or sorry, the EdgeFinder is neutral. It takes into account multiple things, not just fundamentals. Euro and the CAD. Let me also check the European economy. Okay, kind of bearish for the currency. Again, Canadian dollar bullish, euro a bit bearish. Chart is going up, overall a bit flat on the daily. I would not do anything inside of this range. I would wait first for a breakout, a clear break to the upside, or a clear breakdown. Now, because the chart is looking a bit bullish and the fundamentals are neutral, possibly even a bit bearish, I'm being patient. I wouldn't really touch this. I wouldn't really mess with this chart or this currency pair, because there is a divergence in terms of technicals and fundamentals. If this thing does drop, which it very well could, then I would be interested for some possible bearish setups. But as it stands, I would not look for trades on this chart. Okay, GBP, JPY. I mean, as far as I can see, most of the JPY pairs are going up. I have EJ, AJ, NJ, pound yen, looking okay, looking bullish in terms of the EdgeFinder. Let's see, top setups, GBP, JPY. Neutral, okay, kind of neutral, technically bullish. Technicals are bullish, approaching some resistance right there. We could see price struggling a little bit. On the 1 hour, looks pretty bullish, as does EJ, as does AJ. AJ not so much. NJ does look okay. So pound yen, not my favorite. Not my favorite right now. In terms of a EdgeFinder bias, which is neutral. Okay. Lee James, Marco, did you see yesterday's currency chart? Swiss yen was the strongest, yet the dollar was the weakest. What did you make of it? I've never seen it before, hence the question. Yeah, I also saw Chris Pulver's live stream. I think it was yesterday. He was also looking at the currency chart, the strength of each currency, and there was some divergence, which was not, let's say, happening most of the time. Kind of unusual divergence on that currency strength chart. So I'm not sure what to make of it. I just know that for the dollar, I just know my game plan. Okay, I just know my game plan in terms of trading. For the dollar, overall, I'm bearish. I'm just looking for the DXY to break this level with conviction. Then I would look for bullish setups on dollar currency pairs. If this goes up, I'll need to reevaluate my whole game plan. Japanese yen, I'm also a little bit bearish. Fundamentals are a bit bearish. I do think this can go down a bit more. So I would be looking, and I'm already in NJ buy. CAD yen looking for buys. EJ, interesting for buy setups. AJ, kind of flat. Okay. So that's my overall game plan. I don't really pay attention. I don't really pay a lot of attention to that chart of different currency strength. But I did hear it from Chris that yesterday it was a bit weird, that there was some divergence that wasn't the usual. So yeah, hope that helps. Okay, that's kind of it from me. Half an hour has expired. Thank you guys very much for watching. And I will see you guys probably next week on Thursday. So tomorrow I'm not going to be able to join the stream, but next week I will. So thank you for watching and see you in the next one.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EdgeFinder. The EdgeFinder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EdgeFinder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EdgeFinder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EdgeFinder today, and we'll give you a nice live stream discount. Click that link and chat with a rep to find out what kind of discounts are going on right now. Now back to the stream.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy, what day is it? Wednesday. Happy Wednesday. Market's pretty calm after a little melt up yesterday, and that's fine. Hitting some fresh highs in the portfolio. I did post an alert for the pulver alerts on the SPX. That trade is up about 80% of max credit right now. There's about a 99.5% chance it still holds profit, which I'm pretty good with. I mean, we're only out in that trade for like another 12 days. So right here, up around 83%. The smart thing, honestly, is to probably just close it out. If I close this for like a 10-cent debit, let me see if I can close this for 10 cents. Just take the majority profit right now and not worry about it. So it's not filling at 10 cents. I'm going to try to let it fill at 10 cents. I'll let that marinate. If that does get filled, I'll update the pulver alerts. That'd be an 80+% winner. That would be, all right, I just got hit. My SPX trade just got closed out. Good. So update. This is 10:20 a.m. Okay. Take profit hit on the SPX today. Very nice. I'll continue to watch the levels. You know, VIX is down, was down to about 17 today. Now it's up to 17.23. We are just creeping up to these all-time highs in the markets. Here is SPX. Qs actually might have poked the all-time highs this morning. They sure did. So Qs made a poke at the all-time highs. Congratulations. What correction, right? What 28% peak to trough? Markets are down 27% from peak to trough here and decided to rally all the way back. So impressive comeback, impressive resiliency. Now, I will say on the NASDAQ, if we do take out this low, let's say that price does in fact come back down here. If we kind of sweep this area, take out these lows, to me that's a high to low, lower high to lower low. You know, and I just think this U.S.-China trade agreement gap, I would be shocked if it doesn't get filled sooner than later. I think this July market might be a little bit more volatile than I think people want versus just like typical summer trading. Seasonality for July, August is usually quite bullish, but we had a heck of a bullish May, and even this like melt up, slow, grindy, higher highs June. I could see something get a little bit more exciting in July. And maybe it's just a big volatility move that, you know, it doesn't really go anywhere necessarily, but I would just be prepared for some type of expansion in the markets. And it's tough because a lot of times like summer trading is like a little bit slower, but the markets can kind of get rocked a little bit, you know. So anyway, that's that. But Q's poking fresh highs, SPY, SPX just shy of them. They're close though. 613 on the SPY, and I think it's like 6140 something, 6145 in the SPX. But with the ceasefire, the market gapped up and pushed higher all day. I'm really interested to see like how the day-to-day price action plays out. What I'm watching for today, got a bit of a ceiling here on the 0 DT, so ceiling here and floor here. Ideally, I'd like to see price kind of come up in the ceiling zone that I can sell between like 6125 and 6150. I'm going to look for a couple of bear call spreads, see if that level will hold as resistance. But so far today, it's like we've had 40 minutes, almost 50 minutes of just nothing, which has been perfect. Like that was an easy win this morning on some like SPX selling. So that trade is done. The broke wing butterfly that I took, let me show you the pulver alerts here. Let's go A1 trading, go into my index trade. So this SPX trade for July 7th, I went all the way down to 5,700. So that's my pin price at 57. That gives the market like 5 to 6% chance, or I'm sorry, 5 to 6% correction before I would take on really any risk. And that also gives me a 10 wide profit trap. So, I mean, realistically, I can put in the trade for like a 10-cent debit. So I pulled in 65 cents credit, right? So I pull in 65 cents credit. And if I set the take profit at 10 cents, I still make 55 cents out of the 65 cents. That's max credit. Like that's a pretty good return on capital, like max credit. So 55 out of 65, I'm making about 85%. And I'm doing that within a couple of days if it closes. Now, if price is going to turn and fall, I mean, if you zoom in on this image here, this is the risk graph. If price were to stay here, I just keep the credit. This is my 65 cents. If price were to go up, I keep my 65 cents. If price were to go down, I still keep my 65 cents. If price came all the way down to a 5% correction, I have $1,000 profit trap right there. Okay, 5,700 would be a gap fill, right? Like literally this market would have to come all the way back down and fill this US-China trade agreement gap in the next 12 days. And I still have $1,000 profit trap right there. So to me, the better trade is just leave it alone. It's either going to make 60 to 65 cents credit, take the full credit at a 99.5% probability of profit right now, or even if this market drops, it's not that far out that that butterfly spread maybe even gets a piece of that profit trap. So I'm going to go ahead and just remove the take profit order and like open arms that trap and see if we get it. Because I don't know if we're going to get a fall. You know, if we get a fall, okay, maybe we fill this ceasefire gap, right? We fill the ceasefire gap. Maybe we come back and test this level. You know, bulls get tested, or the bears like strike the low. Then we have a dead cat bounce. Then we come back down. I mean, like, what would it be that shifts this market lower? I mean, going into July, what could like shake it up a little bit? Well, July could be all about tariffs again. This whole 90-day pause that we did back in April, that is expiring technically in July. I do wonder, like everyone else, like how many countries lined up to do business with the U.S. How many of us are actually addressing this trade war situation again, or addressing the tariffs? Do we have the tax bill that's getting forced through the Senate? If that gets approved, or is the market going to start forward thinking about $2.4 trillion getting added to the deficits? That's probably not a good thing, right? That's good for gold. It's good for Bitcoin. It's probably still good for equities, but it's not necessarily good for the dollar or bonds. It's not good for inflation. You know, it's like, and then you have that whole narrative of, okay, well, inflation's going higher. What about the Fed? Are they going to cut rates or raise rates? You know, so it's just, there's so many things that, like, one little tweak to this like swirling uncertainty could send the market into, some type of volatility spin. I don't know, but I think the idea is, as I've been expressing all years, like, just manage risk. This market clearly wants to go higher. It's trying to go higher. The NASDAQ hit all-time highs. So the S&P is right behind it. The Dow is right behind it. The Russell's been playing catch up as well. Okay. I still think even if we have a correction, I'm still buying dips. I'm not calling tops, because maybe this is a weird thing where the market just doesn't want to pull back and we have more of a bubble type look to the upside versus a pullback. But I look at some of these logical gaps. That ceasefire gap right there. This is a pretty noticeable gap. And this is the U.S.-China trade agreement gap. Like, these, to me, it's like these are really simple liquidity levels and demand levels for price to find. It's just, will price find it? So anyway, let me see if I can get anything on the upside today. I think the credits are going to be so crappy that I probably won't get the trade that I want. But if I go to today, premiums are so bad. I'm going to do this. I'm going to set a 61.25 by 30. I'm going to go 21 by 30, 61.25 by 30, and try to get this filled for 275 credit. Okay, and then I'm going to go up here to 61.50 and do a 50 by 55 for 275, and I'm going to do this for 2 contracts. There. So I'm going to put those in as pending today, and if price obviously just chops around all day, then it doesn't get filled, no trade. If price grinds it out for the morning, tries to melt up, perhaps this is enough resistance for the day to then reject. And if it does, then 275 can become, maybe $2. And I'll take a quick gain there. If it goes all the way up to 61.50, I'm doing 1 contract here, 2 contracts here. So this would be worth about $550 versus a max risk of $225. So either way, it's like my goal is to win the day. So we'll see. Okay. Yesterday was an interesting correlation. I don't know if you saw this yesterday. I wasn't live yesterday with you guys. So correlations yesterday were really strange. We saw the currency strength market. So Forex. This was yesterday. Dollar was weakest. Swiss and yen were strongest. To me, this is like kind of a risk off trade for currencies. But bonds were up, equities were up, oil's way down, gold's way down, silver's down, Bitcoin's up. Like, not a lot of correlations made sense yesterday, at least in my opinion. So I thought that was kind of peculiar. Like, okay, so we have equities up on the ceasefire, but bonds are up with it. Gold is down, dollar's down. Like, a lot of things that typically aren't aligning. And then in currency land, you see, safe haven currencies on top. So today, little bit different. Super weak move in the yen, and New Zealand on top. Aussie's fading just a little bit, which means hopefully I'm getting my pullback on the Aussie New Zealand. Good, hopefully. So I have pending orders here on all these horizontal levels. So 106.15, 103, and 1.0055. Those are buy levels for me on my Aussie New Zealand. So pending order, pending order, pending order. I mean, obviously there's a lot of support right here. So if I hit this low and it comes back up into this range, I'll range this thing back to like 111 or so. That's fine. That's a good trade. I would imagine, I mean, right now the Australian dollar, so the RBA has a higher interest rate than the RBNZ. CB rates. Australia is at 3.85%. New Zealand is 3.25. So there's a 0.6% differential. Not that that's enough to say like I'm going to do a positive swap trade, but if I'm holding Aussie New Zealand long, at least it's not going to cost me money every day in a Forex account. So food for thought. All right, let's go back to indexes. SPX. I thought we'd have I mean, the month isn't over. I mean, I don't know if this market turns hard to like get back down to 5,900 by the end of the month. It still could. This is a big JP Morgan level, end of month, end of quarter. If we get it though, it's like it's going to come aggressively. We only have a few more days. I mean, we roll into today's Wednesday, so 26th, 27th, and then 30th is Monday. I mean, unless this market is planning on some giant slide in the next couple of days, we're just going to probably hover around this like 61, maybe 61.50 area. And I can see July kind of opening up a little bit of a slide to have a correction through July, maybe. But we're obviously very close to all-time highs. NASDAQ just poked the all-time highs. And we'll see if there's some, profit taking, some risk off trading. And that's the thing is like, what, why, when, like what would be the catalyst to drive this market to fill some of these gaps and find some demand levels at lower levels? I have no idea. It could be any of the 50 things that's swirling around of like, all these things could go wrong. All these things could happen. The market could latch onto one thing. And there's still like something we've never talked about, something that's not even on our radar. It's just price action ultimately tells us what's happening. And price for the last 60 days has essentially done nothing but try to grind higher. So it's exhausting. Like at some point, like my patience is worn thinner. I'm like, what gap, what correction? It's like it'll happen. It's just I'm so sick of fighting it. So I mean, I'm hedged out to the end of the year. If we have a chance to get paid on some hedges, great. Otherwise, I'm just going to position for dips. All right, let's keep going. So SPX, NDX. I do think this is interesting on the NASDAQ a little bit. If you go to the 4-hour time frame, notice the trend line action. Support. If we had a bit of a rising wedge here, that was kind of a failed move. But a lot of times I do see this happen on the back of these rising wedges. If we have, this would be rising wedge. On the back side of this trend line, we have a slide pop up to the upside. Like this technically looks like a good spot to be selling. It really does. If I'm going to sell it, though, it's going to be defined risk. Let me see. I'm curious if I did like an NDX trade here. I'm going to see how much premium I can get for like a bear call spread right now. I don't know why I'm not getting my NDX feed up. No options available. What are you talking about? There. Okay, so if I do the July 18th, let's go. So I want higher numbers, 22.4. So this way, if I were to sell right now, it's too wide. It's 25 wide. I mean, I guess maybe the Qs. Maybe the Qs are a little bit better. If I went to July 18th, we're trading 542 on the Qs. If I did, I mean, I get 60 cents on this trade if I'm right. I'm going to take a stab at this one. Maybe I can go here. So I can risk 80 to make 120. Let me see what that return is. So 80 out of 120, actually So about 150% return, or this one be 60 and 40. So it's the same. I'm either a 542. I can go more contracts here. So I get $1.16. So I make 150. This is a little bit less. So 118 over 82. Yeah. So I think I'm going to go 542 by 543. See if I can get filled for 60 cents here. I'm going to go after this trade. So 60 cents. Bear call spread, selling the 542 call, buying the 543. All right, 59 cents. Okay. So I'm into a trade here for QQQ. I am selling the 542 call, buying the 543. It's a one wide. The most I can risk on this trade is 31 cents. I'm sorry, 41 cents. Okay. So 41 cents, I'm doing 5 contracts. So 41 cents. So I can risk $205 on the trade, but if I'm right, I'm making $295. Okay. So what I'm looking at is if this market can't sit here and the Qs can't sit at all-time highs for the next 23 days, all I need is this price to stay below 542. So I'm going to go into, I'll go into the alert section and get it set up. So this is going to be put into the index trades, QQQ. I'm doing a 718 expiration and selling the 542 call, buying the 543 call, got filled for 59 cents credit. So 41 cents max risk, 59 cents max profit. I need QQQ to stay below 542 by expiration. If the 59 cent credit is trading for, let's say, 15 debit or less, I'll look to close early. Okay, so let me build that trade out really quickly and I'll post the image. So this one's pretty simple, just a bear call spread. Bear call spread here on QQQ. And going out to the 18th, selling the 542, buying the 543. That's the trade. Okay, implied volatility is around 20%. Doesn't really change much. So all I need price to do is just stay. Like price right now is what's live price? Live price is 542. So technically my break even on the trade is 542.59. Okay, that's my break even on the trade. So 542 sell call. Oops. 542 sell call. 543 buy call. Bear call spread. And if I'm wrong, I'm wrong. I'm taking the trade. I think it's like, come on, man, we got to have something. We've gone up for 60 straight freaking days for the most part. I think we at least have a pause for God's sakes. In the all-time highs, we got to pause. So that's why it's defined risk. I mean, if I lose, whole portfolio melts up, it's fine. But I think we have to have some type of, reality check in these markets to just pause or pull back and fill some gaps or something. So anyway, hopefully that gets paid. All right. That is a QQQ trade. Let's keep going. Let's go daily chart, work our way through the other indexes. So the Dow, kind of the same situation, not nearly as close to the all-time highs. Is it possible for the Dow just to go sideways a little bit more? Maybe. I mean, there's a lot of potential support resistance in here. I think the Dow looks pretty good for a bid. It's just, what do we pull back to like the 420 to 415 zone? I mean, if we pull back into like the 415 to even 400 zone, then I'm doing some like 111 strategies down here. I'll sell some puts in the Dow for sure. Those initially, I had those running until like June 20th. Those were full profits. I had like 111s and naked puts. Those were looking pretty good. The Russell, I'm just continuing to sell calls at 200. So I'll keep rolling. I'm looking for the Russell to maybe pull back to the backside of this trend line and see if this is a reversal pattern. Left tip, center tip, pull back to the backside of the trend line. Okay, is that enough to catch a bid? Do we pull back here on the Russell? Still build a support zone, and then we're looking for a catch-up trade where small caps can actually gain over large caps or perform as well. Maybe they both perform well, but we'll see. Okay, volatility index, down to 17. We're back down to, I mean, once we pivoted hard in April off of all that crazy volatility, we came down. This was the largest volatility crush, by the way, ever in 30 plus years of the VIX. This high to this low was the fastest move in the volatility index ever. So, I mean, what I'm saying is we're coming back down to the same levels where once this was kind of agreed upon that, hey, this is now a bull market. I mean, way after the fact, it was completely lagging because sentiment was so nasty, but the markets were still, rallying higher. But we've come down to like, 17. So we're at 17. So that's kind of our new volatility floor is around 17. But this market's not getting overly excited about any risk. It's still like contained around like 20, like 20 to 25 VIX is on like the high side. Maybe 15 to 17 would be the low side. Bond volatility, nothing to get excited about there. SPXY, I mean, it did a pretty good job here. SPXY is up around 31%. That should come close to matching what the indexes did. If we look at the rally off these lows, we had a 26% rally, and on SVXY, you had about a 31% rally. So from this low, about a 32% rally. It doesn't look nearly the same, but this is kind of why I love this instrument, because even in a volatility environment, like a volatility crush environment, this is such a good thing to have in your portfolio. So, I mean, I bought shares at like 35, dumped them around 38 and 40. I didn't hang on to this move into the 42s. It's fine. I'll wait for another volatility event and I'll probably add some SPXY. Dollar index, I still think it's a bear trap. Be careful on the dollar index if you're shorting. Moving stop losses, break evens are better. Being pretty quick on the precision. Oil, I saw a headline today. It's like oil's up today. I'm like, is it? That looks like a red candle to me. And obviously a big smash here the last 2 days on oil. We're down, 16+% in 2 days. So, the ceasefire has kind of contained oil prices. This is probably a good sign for, inflation readings coming in the next 30 to 60 days as well. It may force the Fed to still look at cutting rates and staying on course with what the Fed watch tool shows for September. Inflation is going to be a big deal. I mean, if we see like a tax bill, obviously this Middle East conflict with a big surge in oil, they also are like tapping that narrative of like recession, slowdown. But anyway, oil's been smashed pretty aggressively. USO down. Oil futures, I still have oil's futures trade in. My lowest $50, so I'm just going to hang in there for right now. Natural gas down a little bit. Gold. What's everyone's deal on gold? I saw this 21 period moving average was holding. Now it's not. So we go from 21 period down to maybe the 50 period. I would like to see in this, and this might hurt a little bit more for everyone that's crazy bullish on gold, but if we go below the 50 period down to the 100 period, right? Like if we go down to the 100, it's like this is the correction that I've been patiently waiting for. The 100, the 144, the 200. I want to trade some gold. And I don't know if I'm going to do gold futures. It probably is more cost effective to do gold futures, or I'm going to do GLD because I don't mind owning the underlying. But this is why I put in, naked puts on GLD. This is why I'd look to trade like a 111 or 1111 on gold futures. But it's like, give me a pullback. So, I mean, just look at your moving averages. If this is a floor, it broke. If this is a floor, Is it going to break? If the floor breaks, we're just going to gravitate towards the next moving average, right? This is a previous low around 31.38. We could find support here, or we could find the 200 moving average, which is 430 plus bars. It's a long bar count. I think we still find it. I just don't know if this is going to like ruin all the hopes and dreams of gold bulls. It shouldn't. I mean, perma bulls are like great. Buy some more gold. But I do wonder like if the dollar has to catch a bid. If the dollar catches a bid, then I can see gold falling. That's about it. Like I don't really know why gold would fall other than that. Gold has kind of asserted itself as an incredible global asset and seems to be a lot more well liked than just the dollar and bonds. Okay, so just keep an eye on that one. I'm just hoping we have better pullbacks to get some more gold exposure. Silver. Silver is one of my bigger like non-equity positions, and I think that we're in a pretty solid bull market. Things look pretty strong to me. I did somebody told me yesterday like commitment to traders and institution versus retail. There's kind of some oversaturation in silver right now. Maybe there's some chasing going on, and that's fine. I mean, silver still to me is underperforming gold. Silver to me still hasn't hit all-time highs, and I think that's still where I'm attracted to the catch-up trade. Do we get back up here towards all-time highs? If so, that's still another like 35 to 40% higher. So I do like the move on silver. I do like the posture on silver. You know, we're making higher highs and higher lows, even after all this consolidation. All this consolidation, we've broken out. All this consolidation, we've broken out. We're in an uptrend. We're making higher highs and higher lows, right? Like, I mean, it could be a big channel. It could be a channel this way. There's all sorts of ways. It's like, I can't really paint a picture on silver that says bearish. So to me, this is like buy the dips. It's not going to be like a ballistic Palantir. It's not going to be a freaking quantum computing stock. It's not going to be Circle for, Circle was like the stable coin announcement. It's not going to be that type of mover. But if it's like slow and steady, if it's slow and steady and slow and steady and going higher and higher and higher, I love that trade. Because also that gives me plenty of opportunities to accumulate more and add more to it, even if it's little income trades along the way. Bitcoin, we've had a pretty good 2 or 3 day move on Bitcoin up to 107, almost 108 right now. All-time highs at 112. Keeping a close eye on it. I mean, if it breaks the highs, great. If it is more of a range like so, high to low, high to low, high to low, maybe this, right? Maybe just a different angle, but like still an accumulation phase before we end up having to move higher. I don't know. And I also said that we could go this way in Bitcoin. We could go lows first and then break and go higher. But I still like Bitcoin. MicroStrategy, fine. Coinbase. Coinbase has just been crushing it. These last this is up like 40%, I think, in the last like 3 or 4 trading days, which is crazy. That was up 45% in like 3 days. Wow. So, I mean, I'm not chasing this thing. I'm not going to try to call the top. It's just like impressive. Just one of those things where you see some stocks where they move a ton. It's like, okay. Do I trade it? Do I not? I made plenty of income on Coinbase, during the correction back here. Did a lot of ratio spreads, bought some debit spreads and whatnot. So it was more of an income trade versus buying and holding shares. Ethereum. I mean, for those Ethereum lovers out there, keep an eye on it. I still think this is a pretty good reward to risk trade to get to the upside. You still have some asymmetry. So, and this isn't even all-time highs, by the way. This is just under 4,100. All-time highs are back here at 4,800. So maybe this is just kind of getting started, but between like this area and maybe these lows, I could see Ethereum offering up a trade to the highs. In fact, you know what? I keep talking about it. Guess what? I can trade options. If I go EETH, I can probably put in a trade. I don't know if I really want to own shares, but let me see if I can own shares below like 28 bucks. EETH. So if I went out to the end of the year and said, okay, I think Ethereum is going to be higher than 28 bucks. Well, cool part is I get 0 credit for it. Even though this is within the expected move, it's like this option chain is absolute garbage. So that doesn't get me excited about the trade. The low is around 20. I mean, geez, that's so bad. ETHA. It's even lower. Probably not even any better. Go out to the end of the year. I mean, this one at least offers better. This $11. 12 by 11, put in a ratio spread, 43 cents. So we've got a profit trap and make 40 bucks. I don't know. I'm just gonna stay in Bitcoin, like whatever. So Ethereum, I still think is a good trade. It's just if you're speculating, if you're like actually in, the platforms trading Ethereum versus the dollar, then I'd still be looking for a chance to get this move to go up. It might take a while, right? You might get this swing. It goes high to low, lower high to lower low. Find some better fib levels. I think a good trade is this. If you put in like a 5.0 or 618 entry, and you put a stop loss below this 1388 level, this is your risk. This is your reward. That's probably a 2 or 2.5 to 1. It's not bad. So you can decide your risk, allocate it, 1% risk for like a 2 to 2.5% winner. Not bad. So I like that trade. All right, copper. I'm going to take a loss on copper today. So I had this like lottery play. It was risking 90 bucks to make $1,400. It's not in my little range. So I'm going to lose my 90 bucks today. That'll expire. I think it expires today. Japanese yen, still kind of choppy. Japanese yen, EWJ. This is trading the Nikkei with the top 80% of stocks. Bottom 15 or 20% is cut out. DAX. I'd still like to see the DAX pull back. If we get like a 30, 50, sure, 30 to 50. Like area 1, area 2, I'd like to see either one of those levels hold and get the highs again. So for anybody looking for more precision, if you bounce hard off the 30, go up to the highs, that's a great trade. If it goes below the 30, we probably hit 38 to 50%, still the same thing, trying to hit the highs. So I'm just, again, kind of waiting for a pullback on a lot of the stuff. FTSE, same thing. Big swing from April lows. Do we get a pullback that the market's able to find some support, get back to all-time highs? Argentina, nothing. China, pretty good run the last 3-4 days. Brazil still hasn't broken recent highs. Latin America still hasn't broken recent highs. MAGs, slightly higher highs. I mean, that's it, like slightly higher highs. I mean, could we get MAGs all the way back up to the highs again? I wouldn't mind seeing the MAGs do this. Give us a freaking pullback. Like we swept this level. We're up here in open space. It's above this trend line. So how about a swing that can give us a pullback? We can find some structure in here and then position for all-time highs again. I would like that. If we take a fib from low to high, I mean, I'm just making these tiny little adjustments. It doesn't mean that price has to just drop to the lows again. It's just like, give me a pullback. Give me 30%. Give me 38%. Something in here, right? So something like that. Or maybe this is my first swing and we're kind of running up into this resistance. Maybe this is melt up, melt up, melt up, melt up, and then we fall. 18127 resistance and we fall. I'm just looking at some realistic pullbacks. That's all. So either this is my high right here. I'm hovering my mouse. This is my high, or we just keep persistently making higher highs. Either way, I mean, fibs aren't perfect, but between this level and forming a high, I just think we have a pullback that makes it a bit more attractive buy dip. So I'm going to set it there for now. Apple, fine. Amazon, fine. Choppy, nothing to get excited about. Broadcom poked all-time highs again. Probably not worth selling, but at the same token, for the next maybe, I have no idea. But we already had earnings. We do have a dividend coming. It already was announced on the 20th. Upgraded. I mean, I'm pretty sure Broadcom has fundamentally higher levels. Let's go Simply Wall Street. Broadcom. Oops. I mean, part of me wants to sell this thing so bad. Let me see what I can get for it. Again, just to define risk trade, if I go out to July 18th, sell the 265, 267, get $1.32. I'm risking about 118 bucks to make 132. Not a bad trade. I could regret it, but I'm going to take the trade. I'm going to go $1.30 to risk $1.20. So just over 100% return on risk. It's about 108% return if I get this right. Let me see if I can get $1.35 and increase that a little bit. 265 by 267 out to July 18th. So 135 not filling, 134. Come on, be generous of the mid price. 133. You turds. Hopefully 130. I don't want to take less than 130. 125 is like 1-to-1. Son of a biscuit. So I can do a credit spread, or if I were to buy the 270, maybe 5 wide here, 228 to make 272, and that doesn't seem like a bad play. I'm risking a little bit more though, versus sell, buy. So this is a 404 out of 346, 160% return on risk. So if I do a bull or a bear put spread plus a bear call spread, I'm just kind of going 2 ways to trade this thing bearish. I don't need to do both. It's just trying to see which price is a little bit better. If I did 270, 265, move this 1 strike. And I like that trade, just costing a little bit more, but I get a slightly better return. 275, 122% return. All I need this to do is get below 262. The better trade is to set the line in the sand at 265. Try to pull, I mean, come on, man. 133 can't fill right below the mid price. $131 is not filling. 130 final offer. Naturally. Well, I didn't really want to get filled, but I did. All right, 130. So this is going to be in for a stock trade. New trade, AVGO, 718 expiration, selling the 265 call, buying the 267.50 call. Pulled in $1.30 credit. So 120 max risk, 130 max profit. If the $1.30 is trading for 30 cents debit or lower, I'll look to close early rather than hold through expiration. Okay, I'll build this one out, post the image. This is AVGO, July 18. Sold the 267, 265, yep, 65 and 67.50. There's the bear call spread. IV is around 38.3. That's the trade. Okay, trade's in. All right, trades posted. AVGO, new trade. IBM, I posted earlier this week. All right, questions on that one? So I'm doing the 265 by 267.50. See if we can, I mean, and also it's like one of my favorite indicators is overbought conditions with divergence. We're sitting here on a daily time frame. This move has gone up, 100% or something ridiculous like that. I mean, it's up 95%. a pullback would be nice. So maybe through this July cycle, we get a little bit of a pullback. So let's find out. Google coming off the lows, which is kind of nice. Meta, I mean, I hate to say I want to short Meta, but if we get back to these highs again, I might look at a bear call spread. I don't know, or I'll just wait. I mean, this thing's a $700 stock. I should probably just, I had fun playing some ratio spreads down here. It was still very expensive, but they worked out really nicely to grab, $2, $3, $4 of income on every trade. Microsoft, same thing. Microsoft, I'm still holding the allocation. Lots and lots of lined up ratio spreads here. So still letting some of the allocation pay me. Netflix hitting some fresh all-time highs. Another one that probably will have a correction. I mean, we're overbought with divergence. I could see, trying to pull back into some type of moving average here. But this one isn't really like this was when Netflix was ripping to the upside. This was recovery for the bigger market, as well as this isn't tariff related. Like there's nothing to do with tariffs and trade in Netflix. So I think that's a silly one to kind of short, although I do think it's going to fall. Nvidia, look at that rip on Nvidia. Wow. Yeah, I mean, we're creeping up to all-time highs on Nvidia. Good for it. Saw Tesla was down today. It's fine. I'm just going to keep selling calls. Berkshire Hathaway. I do want to watch. I talked about this one yesterday in my afternoon session. I do want to watch this trade because if we bounce off this 200 moving average, that could be a good spot to be long. But I just don't know if this is also going to be like breaking the lows, breaking support. Just keep an eye on this one. Even just with option trades, like keep an eye on Berkshire Hathaway because if it holds the 200 moving average, I mean, I don't know, call me crazy, but maybe this is a trade. We're at 489. The low's around 480. Let me see. I'm going to look at this trade. I'm just going to maybe do a debit spread here. So Berkshire B. I mean, how ugly does it get out there? Well, if equities go higher, I feel like Berkshire's got to do okay. If I did a bull call spread, so if I bought the 85.90, pay 332 to make 5, that's crap. Pay 622 to make 10, that's crap. Pay 290 to make 5, that's crap. Like I want something asymmetrical. So I think what I'm going to do here is if I looked at a bull call spreads are fine, bull put spreads are better. So that gives me $2 to risk $3. That's 220. I mean, I can't even get 1-to-1 going in the money. Never mind. I was hoping for like if I went 5 wide, it's like give me a 270 credit, give me a $3 credit, then I'll take the trade. If I want to go $3, I mean, how far into the money do I have to go? That's insane. I'm going $11 in the money, and I'm not even getting a 1-to-1. Like this is kind of like trading the S&P 500. That's stupid. It's like trading the S&P. So I don't know, maybe a debit spread. If we come here, I could do a debit spread, and if price goes up, to revisit all-time highs, then I get paid on the trade. But I'm trying to set it up where I can have greater than 100% return on risk. That's what I want. If I can't structure the trade that way, then I'm not going to take it. Okay. Bonds. Catching a little bit of bid on TLT. I wouldn't get overly excited. There's a lot of resistance here. I mean, the bond market's been in a 5-year bear market. I don't know what you want for the bond market. It's crap. Everyone's talking about this big squeeze in the bond market, maybe, but if everyone wants to squeeze in the bond market, you're not going to get a move in equities, right? If the bond market squeezes, you're going to see a drop in equities that nobody's going to be excited about. I don't think the bond market's going anywhere. So even if we have a rally up into this 200 moving average, which is around 89 right now, I think this just short-term like rallies, grinds, and then hits resistance and then fades back down. And then grinds, fades back down. Grind. I mean, that's probably what we'll end up seeing. As long as nothing breaks, we'll probably just kind of hang out around these lows. There's nothing exciting outside of maybe a stable bond market, right? Where you trade between like 84 and let's say 89. So like a $5 range in bonds. Okay. But you still get, your 3.7%, 3.8%, risk free. But the volatility is so low that maybe it helps. Like you don't really have a big drawdown. You just kind of hang out and get your 3.5 to 4% yield, So anyway, I'm just trying to get out of my TLT positions with an 89 sell call. It's a diagonal spread. That's all. I mean, if I can clear this thing and get out of 89, I'd be pretty happy. If we have a dip in the equities market and we do get a bit of a squeeze towards 89, it's my expiration is the end of the month, by the way. So I'm just going to keep like selling 89 calls or 88 calls and see if I can get out of it. 10-year yields, green on the day. Again, still way above the Liberation Day levels. 20 years still above the Liberation Day levels. 30 years, same thing. Like, global yields are still on the rise. Mortgage is still around 6.8. Futures market currencies, liquidities come back in a pretty big way. I mean, this was basically your high yield, like your triple B or your triple A, triple B, triple C bonds. So your sign of like, if things are really bad, this drops hard, and like liquidity bid ask prices are super wide, and it's way less liquid in the markets. Okay. So anyway, we've come back almost like in full with JNK, also LQD. So I mean, the market's kind of complacent once again. Credit spreads are very tight. Jobless claims, nothing that really trends higher. Continued jobless claims. I think we do have to acknowledge that this has been showing higher levels. So I mean, I wouldn't say like, oh look, this is it's aggressive bullish trend. It's like it's not. But if we start to see this is going higher, like that's a noticeable trend. Right? We're going to have non-farm payroll the first, it's not going to be the first week of July. It's going to be the second because we have July 4th, I think is on Friday this year. Yeah. So Friday the 4th, which is going to be next Friday. There's no non-farm. It's going to be on the 11th, I believe. I can double check that here on the calendar. So if we go next week, Friday the 4th, no news. It'd be the 11th. What? Do we wait? Did I miss it? Did they move it to a Thursday? Ah, they moved to Thursday the 3rd. So going into the holiday weekend. Interesting. Okay. So we have non-farm on Thursday the 3rd. There's no forecast. I was curious, like, are we going to start seeing the job numbers come in positive, but getting lower and lower and lower? Again, that's probably not a good sign for this labor market, but we'll see what it does. So anyway, continuing jobs claims, watching non-farm payroll. How are the numbers? How are the revisions? Revisions have been down for a while. Here's China up a little bit. I mean, HSI crushing it the last 3 days. CQQQ off the lows. Alibaba, meh. Baidu, meh. I mean, it's fine. I like honestly, I like these stocks technically. They just don't want to freaking move. I feel like this has to be like another round of crazy quantitative easing / like fiscal spending from China, another round of stimulus, something to get this market like ripping up to the upside. It just hasn't happened yet. FXI steady, KWeb steady. JD, I've got $36 covered calls. Maybe this is a bit of a wedge that's forming here in the lows. So some strong support here. Maybe a bit of a wedge in this area. I'd like to see a squeeze, but I'm not trying to hang on to this one very long. Like my call's at 36, and I'll sell another 36 or I'll sell a 35. My break even's around like $30. Schwab dividend dropping, Schwab growth up, big difference there. SCHY, which is non-US, down off these highs. SCH growth. So I mean, there's a noticeable difference between growth and value or growth and dividends. You go to equal weighted RSP. RSP still a ways away from these highs. I mean, the argument is that equal weighted is supposed to be better for the broader market. Look, equal weighted is trash because you only need 10 good stocks to still carry the SPY, the QQQ to all-time highs, which is essentially what we've done. RSP is still 5% away from the all-time highs. QQQE, we're just shy of the all-time highs, but it's performing better. Like tech is performing better right now. Tech is performing better. Tech was the biggest comeback, the most resilient comeback since our bottom in April. It also was the most volatile. So when we had the correction in April, tech got hit the hardest. Close to it. I mean, probably one of the worst sectors was tech, but the most reflexive and bouncing back to with this AI stuff. Okay, what else? I saw some gold. I saw some TLT. What else do we have? Gold's pretty easy. I'm just looking for a correction. So we're below the 50-period moving average now. And are we running into the, so this is the 21 period. Here's the 50 period. Here's the 100. Here's the 144. Here's the 200. So I'm just going to watch, right? Like I don't want to buy the 50. I know that some traders might look at this and try to scalp this thing off the 50, and that's totally fine. It's not me, right? I'm looking at the 100 to the 200 minimum pullback, minimum. And I don't care if this thing is at highs or at new highs. I'm still going to be making money on gold. I'm saying the way I want to add more to it is going to have to be a pullback. So I'm going to stay with long silver. I'm staying with long gold. I'm just looking to buy more at better discounts. So the only trade I have running on gold right now that's adding to my position is naked puts. I've got a 270 and a 265. They're naked puts. That's it. Because I'm telling, like I'd own it. If I get assigned, I would own it. But we'd have to fall like 13% for that to happen. So I'm pretty sure it's just going to be an income trade. But I like it. Still like Bitcoin. Currency wise on the day, currency strength's right here. So New Zealand fading a little bit. We got a lot of currencies right in the middle. Japanese yen is your outlier, weakest on the day. So New Zealand strongest, yen weakest. Everything else is pretty much in lockstep right in the middle, just garbage. Low volatility today in currency land. Okay, any of the charts questions? Anything else? For the rest of my day, we're still pretty choppy here. We're not, I mean, the ceiling levels have faded. I still have my trade in 61.25 by 61.25 by 61.30 and a 61.50 by 61.55. New trades I added today for pulver alerts. I added a trade on AVGO and I took a bear call spread on the Qs today. So I'm gonna play the July expiration cycle out to the 18th. We have a bit of a dip coming. Hopefully we do. A dip, a pullback, a correction. I don't know what the catalyst is. I just think this market is pretty overextended. And I could be wrong. The timing could be dead wrong. I could be like, damn, market doesn't go down and it's going to be like September before it corrects. Maybe, but define risk. If I win, great. If I lose a couple $100, you know, it's trading. But we'll see. Okay. All right. I will let you go for today. Come back and do it again tomorrow. All right. Thanks, everybody. See you. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.